ECB rate cut. How to impact your finances. European Central Bank lowered interest rates for the second time this year. The new rates are 3.65% for the main refinancing operations, 3.9% for the marginal lending facility, and 3.5% for the deposit facility. The impact of the ECB rate drop on your finances. Interest rate reductions typically indicate a decrease in the cost of debt. Consequently, those who have postponed major plans like purchasing a home or remodeling one, purchasing a vehicle, or taking out a sizable company, student, or personal loan, among other things, are now more likely to move through with them. Impact of mortgages. The rate drop may result in lower mortgage rates for some borrowers. This would mostly apply to variable rate mortgages, which are subject to changes in interest rates, both rising and falling. Consequently, as interest payments on mortgages are frequently among the biggest monthly expenses for households, this can greatly lessen the burden of mortgage repayments. Fixed-rate mortgages, on the other hand, are unlikely to be impacted by the ECB's rate reduction because their interest rates are predetermined for a specific amount of time, typically the whole loan term. If interest rates drop, borrowers may opt to refinance their mortgages at a reduced interest rate. Nevertheless, this might still result in significant costs in many circumstances. Impact of credit card debt. Europe's average credit card interest rate was 5.9%, according to deposits.org. However, since most credit cards have variable interest rates, the recent ECB rate cut may also help to relieve some of this strain by lowering credit card interest rates. As a result, consumers might find it simpler to pay off outstanding debt and, ideally, maintain regular payment schedules. As a result, as more of your contribution is applied toward reducing the total amount owed, it may eventually result in lesser debt. Nevertheless, depending on the credit card issuer, it can take some time before reduced interest rates are applied. Impact of savings. The interest rates on savings accounts, which are anticipated to decrease with the magnitude of the central bank drop, are another significant way that the ECB rate cut will likely fall to affect personal finances. Therefore, if individuals use variable savings accounts, they probably will receive a lesser interest return on their money. The drop is unlikely to have much impact unless the savings balance is substantial, even though it is likely to be felt most in high-return savings accounts. As of right now, fixed-rate savings accounts, which have an interest rate that is fixed for a certain amount of time, typically 1-3 years, will not be affected. If interest rates remain low, depositors may experience a reduction in their savings interest income when the fixed term expires. The fixed interest rates often offered by certificates of deposit CDs and other savings vehicles are unlikely to be affected by the ECB rate drop.